Aspen Pharmacare was founded in 1997 in a house in the Durban suburbs and is now the second largest listed medical company on the JSE with a market cap of over 142 billion rand. It has operations in nearly 50 countries and employs more than 8,000 people. However, over the past year, Aspen's share price is down more than 20%. Is this a sign of more pain to come, or is this a buying opportunity? Joining us from our studios in Cape Town to discuss the outlook for Aspen is Finweek contributor, that is Moxima Gama. Moxima, lovely to have you. Let's talk about Aspen, because before the 20% fall that we've seen, it was one of the darlings of the JSE. Why has it done so well?
Hi, Dumi. It's simple. It's a defensive stock, and most defensive stocks, investors kind of like them because they can kind of outdo or outperform the economy, whether it's in any indecision or any turmoil. So it does act as a little security for most investors, so they will invest there because they know they'll probably get a good return. And another thing, it's in a pharmaceutical industry, which is a very resilient industry. So that's why it was pretty much a darling stock with all these economic conditions we're currently under.
There's been a lot of activity that's taken place. There've been some acquisitions, selling off of non-core assets, but a couple of analysts have been concerned about the debt levels for this company. Is this justified?
It is. I mean, they're currently sitting they've spent in excess of $2 billion, which is quite a lot. What they're trying to do is actually just concentrate on divisions that will benefit them or have greater value, and then sell off some of their portfolios. I mean, as an investor, you would think, where will you get the money to refinance this? Is it going to affect my investment or returns, or even their financials? And look, they're planning on financing, but through refinancing that debt. And it has increased their gearing to about 49%, which is a bit substantial. But I always say it's Aspen, and it is in the pharmaceutical industry, which in fact is the single most profitable industry amongst all the industries. So I would say that it is a bit of a concern, but you should also know that it's a strong company that's developed from from the bottom up, and they're doing this to bring to appreciate the value of the share.
Moxima, in their recent set of results, they did speak about Venezuela. We did see pressure coming through from there. What are some of the other geographies that they are struggling with, and which are the ones that have been outperforming?
Okay, so with Venezuela, they just basically, it's an emerging market, and we all know emerging markets are struggling, borderline recession, and so are the currencies. So they then realized that they've got a dollar-based debt, and with the currency devaluation, that obviously affected them. So they are kind of weaning off or pulling out, and they're looking more at the US, which seemingly is profitable for them, and China as well, specifically with their baby food or their nutrition division. So that's where they're looking at this point.
Moxima, thank you so much for taking us through the outlook for Aspen and helping us know what the challenges and opportunities are. That was Finweek contributor Moxima Gama. Right now, let's take a look at this week's Editor's Choice.